Welcome, ladies and gentlemen. This is the K-Market Daily Insight for Friday, June 19th, 2026. Today, we will be diving deeply into the market microstructure and conducting a dynamic chain analysis of the South Korean equity market. Let's begin. Looking at the overnight context, U.S. markets advanced, with the S&P 500 reaching the 7,500 level, up 1.08%. However, the macro backdrop remains tight. The FOMC held rates steady at 3.5 to 3.75%, and the U.S. 10-year Treasury yield remains elevated at 4.44%. On the tech narrative front, Apple CEO described the AI chip shortage as a 1-in-100-year flood, while JP Morgan officially declared a CapEx supercycle. Translating this to the local market, the U.S. dollar to Korean won exchange rate stands highly pressured at 1,538. Despite this severe FX headwind, foreign investors executed a massive 1.39 trillion won net buy in the KOSPI yesterday, strictly targeting mega-cap tech. Moving to the market regime, we are currently declaring a micro and sentiment dominance regime. The intense focus on AI fundamentals is completely overwhelming traditional macro headwinds. We categorize the current Korean market microstructure as being in Phase 3, re-evaluation. Here, we are witnessing a unique Korean market phenomenon. Capital is aggressively migrating only to definitive cash flow generating assets, creating a localized supply black hole. Smart money is actively defending the KOSPI, despite the 1,538 won resistance. For intraday trading, we expect a strong gap-up open, followed by a fierce tug of war against retail profit-taking and margin calls spilling over from the secondary board. Let's break down the core dynamic chains driving today's action. Chain A is the AI surge. Global tech rallies are directly funneling liquidity into Samsung Electronics and SK Hynix, forcing a mechanical breakout for the broader KOSPI. Conversely, Chain B is the macro drag. The hawkish FOMC and elevated yields keep the won vulnerable, collapsing sentiment across Korean small and mid caps. Chain C introduces a critical idiosyncrasy of the Korean market: index hedging. Because Samsung and Hynix hold such an overwhelming weight in the KOSPI, their sudden surge forces local passive and index tracking institutional funds to mechanically buy them just to avoid tracking errors. This creates a severe supply black hole, draining liquidity from virtually every other sector. This brings us to the most striking feature of yesterday's session: structural decoupling. We witnessed extreme polarization. The main board, KOSPI, closed up 2.25%, while the tech-heavy KOSDAQ plummeted by 3.01%. This is not a simple overshooting. It is a rational market correction in a high-rate environment where capital abandons speculative growth. Looking at the flow divergence, smart money, foreigners and institutions, are heavily concentrated in tech. Meanwhile, noise traders, primarily local retail investors, sustained a net buy of 467 billion won in oversold KOSDAQ assets. In the Korean market, retail investors have a strong tendency to average down on losing thematic stocks, a behavior locally known as water riding. Right now, they are falling victim to an information cascade, which is actively exacerbating this decoupling. The proprietary Momentum and Noise Index currently scores a highly elevated 85 out of 100 points, indicating a strong bull bias driven purely by supply. Supply factors scored a perfect 60 out of 60, propelled by the massive foreign inflow and the overnight Philadelphia Semiconductor Index surging 6.42%. The sheer force of this liquidity is completely overpowering the macro headwinds, which scored 25 out of 40. Make no mistake, the market direction today is entirely dictated by this tech-focused supply, ignoring broader macroeconomic gravity. Applying Bayesian updating to our overnight data, we project the following scenarios for the next 24 hours. Our bull scenario commands a 65% probability. The trigger is continued foreign net buying and successful defense of the 1,540 won level. If met, expect a KSOP breakout of positive 1.5% or higher, stabilizing after 10:30 a.m. Korea Standard Time. The base scenario, at 25%, assumes local institutional profit-taking after the morning gap-up, resulting in a modest KSOP gain of 0.5 to 1%. Our bear scenario represents a low 10% probability tail risk. If the US dollar to Korean won breaches the 1,540 mark and foreigners switch to a net short position, we could see a sharp market reversal before 1 p.m. Finally, our execution strategy and sector rotation map. We strongly recommend an overweight position in the high bandwidth memory value chain, legacy memory turnaround plays, and semiconductor substrates. Utilize trailing stops to maximize profits during this supply black hole phase. Conversely, we are underweight KOSDAQ secondary batteries, specifically EV supply chains, and biotech. A specific warning for the Korean market: defer all attempts at bottom fishing these retail-heavy sectors until we see clear signs of Phase 4 stabilization and improved market breadth. For risk control, maintain a 20% cash position. The exchange rate is the tripwire. Failure to defend the 1,538 won level exposes the entire portfolio to sudden foreign outflow tail risks. That concludes the K-Market Daily Insight for today. The key takeaway for global investors is to ride the foreign liquidity concentrated in mega-cap tech while strictly monitoring local retail capitulation and FX-related tail risks. Thank you for your attention, and we wish you a highly successful trading session.